All right, we're going to get started here. Good evening. It's a long day. Still Friday night. I got back into the office, and I always do some research. I always do my homework. I always go back and look at the charts. And I want to do a couple video. Well, I want to do this important video. I want to kind of, again, try to catch up a lot of the new listeners and new people who are learning the methodology. You know, there's so many ins and outs of what I call the HPS methodology, which is based on stochastics and divergences and lining up other indicators along with that, and using a group of stochastics to read the markets and see the different patterns, to see the levels line up. It just becomes, after so many years of doing this, it becomes a really a business-like approach to the market, and that was always my goal, is to take the emotion out of the market. For me, myself, we all have different personality types, but for me, and I'm going to show you the importance of the bot. When I started to get the bot, first of all, I made the bot, and I'll show you the bot right now. There's a little history behind this. If you've been watching the show, you see how well divergences work, and what I teach and how I recognize those. Included with the bull flag and the bear flag, and combine that with discipline and patience. You put all that together, and you should come out ahead in the markets, and that's going to be your best bet in trading the markets. Since there's no right or wrong ways. That you want to make money, so. There's the basic concept of the market is to buy low and sell high. Now there's so many other different ways of trading and stuff, but you get the picture. So, knowing that's our goal, and we want to always buy low and buy high, you start concentrating where the lows are and where the highs are. And I'm not going to go back. I'm not going to dig down into the whole methodology tonight, but I will explain. Like I said, I'm looking at the bot right here, and I will explain how I came about, not wanting to miss these setups. I knew how well divergences worked for years and years at work, and I've refined it to, from my little levels, and I've worked with other time frames with the divergence. So, and I know the angles. I know what a good divergence is. I know how the volume should look. I know where the candles, I know where they show up, time frames they show up in, and what kind of patterns they show up, and when to start looking for them. All right, and so I knew that, so we programmed that all into the script. This is a Ninja script for the RockBot channel, and the RockBot channel was just for me, because I was seeing setups overnight that were just really tremendous, great setups, and I'm saying I wouldn't even want to miss these. If there was a beautiful 5-minute divergence, a high-level divergence at 2:30 in the morning, that probably would have been the bottom. When we look back at it, and maybe it went 7-8 points, that's a lot of easy money to be made if you're in front of that. Here's the, let's see here. Let's go back to this screen here. This is the excuse me. This is the chart for today. End of the day. The band of stochastics. Again, if you're not familiar with the whole methodology, it's going to take a while to kind of catch up. I try to really throw out, throughout the important parts of how to put it all together, and then it just takes time to understand it, and you'll catch on. You'll understand. You'll start to see it yourself. And there's only a few things. What makes this so great is that we're only looking for maybe 3 to 4 different type of setups. A pure divergence, or any type of divergence, a pure double bottom or a relative divergence. All right, some people might even call for a hidden divergence, which I call it kind of a different hidden divergence. But a divergence, basically, as the first setup. Divergence combined with a quad rotation is extremely great for a trend change. And that's goes right to the top. Goes right to the top of the list. We're talking too much today. And so we look for, identify the channels. And the other, probably the big setup we'd like to do is the real good 2020 bull and bear flag. The 2020 flag is just very simple, and I walk you through it. Today was a perfect example. I said, and I wanted to do this video pretty much to kind of point out this perfect bear flag at 1440. Little pop, pull back, little pop. But it took time for this to get into an overbought. And right when it hit that 80 level, this was on the 50 now. Remember, the 20-50 are pretty much equal. If the setup is setting up properly, it should be on one of those moving averages. Preferably the better, the weaker of the market would hold the 20. But in some cases, you get a little farther, you get to the 50-period moving average. You see that a lot. And then the 50 will hold. It'll come back under the 20. And then the 20 will start holding again. So if you do have and this was kind of let's see here. You had that 1 pivot, 2 pivot, 3 pivot. So it was kind of a 1, 2, 3 pivot area. And then we got oversold. And we got oversold right to a quad rotation right here. And then even though there wasn't much of a move on the quad rotation, we could read into that by seeing how that 60-10 is embedded. Now, you can't see the 60-10. It's underneath those coupons. So let me get rid of those coupons there. Oh, before I get rid of the coupons, take advantage of this. This is what we do. Great opportunities to trade this style of trading, get the alerts, get everything, and then, trade on a prop account and have a good opportunity of actually qualifying. There's so many people in our room that are qualifying. And it's just, read up on more on it. I have a link on the front of the page at DayTraderRadio.com. Just go to the prop trading there to show you how they work, everything about it. Definitely great for a beginner trader to start trading with. There's no risk. There's nothing. It's actually, I love the idea of the people doing it this way, not risking their own money, learning the ropes, and having an opportunity to actually fund an account and have a funded account. I mean, it's just as simple as that. So, coupons are always good. These are always the highest coupons out there. DTR Apex. It's for the Apex. It's 80% off this month with a 1-day qualification. That means if you had a 25K account and you qualified in a day or two, you could just hand that in for your, you could send that in. Normally, these prop accounts require you to have a certain amount of trading days under your belt. And this is much beneficial because, more time you're in the market, more chance you're going to, mess up. So, it's great to have that 1-day qualify. You qualified like the other day, CPI, boom, you had like a 20, 30 point, well, if you could get on one side of those, you qualify. That's free. It's like, you got to just try it out. So that's how you try it out. Bullinox is the other firm. I know both of the people who run this. I interviewed them. So these are the ones I and most of the people on the site use. So the Bullinox is another company that has a 90% off discount. That means 90% off for the first month, and then it reserves at DTR 90 and 83% off a monthly. That's monthly. That means recurs. Typically, these things are like, this coupon thing is kind of a way for them to promote because these prop firms are popping up all over the place. These two are very reputable. So, but there's so many out there. You see these coupons out there all over. But these are really cheap. The 90% off brings a 25K account down to $14.50. So that's really, really cheap. But remember, that's 1 month, and that's something you want to kind of take a higher risk trades on, into news, into things. Be a little bit more risky with that because you don't want to hold that more than a month. All the other ones, 83%, 80%, that brings it down to $20, mid-20s. And it is recurring, so it means that you can have the account for as long as you want. And you get that Ninja Trader, you get the Ninja Trader platform, you get the data feed, rhythmic data feed, you get the license for the Ninja Trader, and you're able to actually run the scripts. If you get the scripts here at Day Trading Radio, you're able to run the scripts on that. So it's pretty cool. It's a whole thing. So beyond that, let me take that off now, so we don't have to. So underneath here, you have the 60-10. If that's embedded under 60, and this rotates up to 20, my bad. This stays under 20. This rotates up to 80, and this stays under 20 and closes under 20. Remember, it has to close under 20. But you could already see that this is, we had a down day. There's a lot of pressure in the market at this point. The 60 period stochastics are heading down. So this is a good sign of a long extended move down. It's in this flag. It's heading down. It's still heading down. Eventually we get embedded. Once it starts to stay embedded there, every rotation is usually a bear flag. And then, let's see here. And again, part of this video is I want to talk about a couple different things in this video. The first one is the importance of the 60-10 stochastics. The 60-10 stochastics, right on the bottom here. If you don't know what I was talking about, I had the mouse on the other computer. This is the flag right here. Move away from the 20 to move back up to 20, holds under the 2050. Rotation up there. You probably want to, the closing price, probably right when it starts coming, losing that 20 again. That's probably right where you want to be. It's already getting oversold, but it drops fast. Well, actually, you always want to take the flag trade right when it touches the 80 line. So that's where you go, because that's always at the top part of the flag. But you also want to make sure that that you're not too extended above the 20 period moving average. In this case, it's kind of hugging that, and it's under the 50, so the 50 counts instead of, if it's so close, that's fine. Anyway, that's the other setup. And it's very important, that 60-10. It's going to give us so many different clues. I talked to a member today who contacted me on Zello, and he said how much his trading has changed now that he understands why the 60 is important. He goes, he said he just trades off the 60. That has to be up, moving up. He goes, you just get such a big benefit of having the 60 period move up instead of down or embedded. And so other times you might get a good setup and you have a quad rotation. Once that starts to move up, that's when you want to be looking for the move up. It's almost simple, momentums. Here's a nice little divergence. And every trade in this environment, especially in a market that's down 300 points, if you get a setup, you're always taking it off on your first rotation. The whole trend all day is down and stuff. Why is it going to end? Well, the reason it might end there because it's a divergence, but why would it end? And that's not a big real divergence. And we look for real divergences on the 5-minute time frame. Whenever I look for, I know I might be jumping all over the place, but here's this divergence. This is just a 1-minute divergence. It has a high level rotation, and it just kind of slowly moved up to the 50. But right when we got up here and we got over that 80 line right there, we're up at fancy. That's your sell. That's your sell. You have to just abide by a certain rule. Maybe this doesn't give you a lot, but in this case, the market's moving a lot. So this actually is a few points. There's like 4 or 5 points between that and that. So you could get a couple points off that. The fact is, you're going to get something. The discipline part comes in by understanding you have to be like a machine. You can't just say, I want to smoke the hopium and hope it breaks out here. You have a decision to make. You have a divergence. The trend is down. We're trading way under the 200 period moving average. We get a fast rotation up to 80. Am I going to just take it off and not even talk? I would take it off right there, right on the strength. Oh, it's going. Boom. Getting all excited. Right when I saw that 80, it's gone. It's gone. No, don't look back. Even if it ran. But the first thing is, you should have multiple contracts. So just for example, you'd get in this with four contracts. You would sell 2 here, move the stop up to break even, and if it comes back, no harm. And that's what I do with the RockBot. Now the RockBot is, wow. I mean, it crushed it today. I mean, I was watching it. Now this is set. It takes the formula. I never really went back into that story of why I developed the RockBot in the first place. I did not want to miss these setups. That was basically it. I said, it's worth probably me getting up at 2:30 in the morning if there is a good divergence on a 5-minute time frame. I said, I don't mind. I have crazy hours as it is. Sometimes, most of the time I'm up till 1 or 2 o'clock in the morning. So if I'm around the computer and I have this thing, I have the RockBot running, and it comes up with an alert, and I could make it talk to me and say, Johnny, alert, divergence. It's just something. That's what I did. I said, I'll just program this, have it run, and if it gets a divergence, it'll wake me up. if I'm sleeping. And I'd look at the computer screen, annoy the hell out of my wife, and see if I wanted to take the trade. And I'd take a trade. But I didn't want to miss this. I know the beauty. When you have it, and you know that you have an edge, you probably want to continue to use that edge even overnight. And I think you have a better edge in the overnight trade on evaluation accounts. Not real money, but the evaluation accounts are pretty. They don't really affect the market. And the overnight setups, if we go back, all right. This is the. Let's back up one more time. This is the RockBot. So I did the RockBot. Then I realized the RockBot, it's very easy to set the alerts or, set it up to buy. So I put the buy thing in there, put the sell thing in trailing stops. And I just, built it out that way. And now that's what and that was just a plain old divergence. It was called a Thunderbird Divergence, by Divergence. And that was a divergence script. And then I was really working a lot with quad rotations, just on the, working with that and seeing how well that worked. And then I just started overlaying the divergences and the quad rotations. That means if we have a divergence and a quad rotation, it has to have those two things line up. Then we'll get the trigger. So we don't see as many triggers, but the triggers we see are just usually huge. And now this is on the 300 tick chart. And I won't tell you why it works better on the 300 tick chart than on a lot of other charts. It's just, that's what the stock gods want right now. It is zoned in. Sometimes I see the 1,000 volume is zoned in, I guess. So now you have the option to put that on your and let this take these trades for you. But this is very important, and this is a lot of people come into trading thinking they could just put a bot on and get these results. Not all the time. If you have a choppy market or a down, you have a buy side program, and you're counting on it to take divergences, and there's a stronger trend to the downside, your divergence will be there, but they will not get the you won't get the size of the move you would normally get in a different type of market. If the bias is down and you go long, you're probably only going to make it up to the 20 or 50 period moving average. But that might be a divergence. I mean, it might be a divergence, but you're not going to go too far, and you need to sell into it. So you could make 100% of your trades as if you got out maybe at one tick, but you don't want to do that. You don't trade that way. That's not the way to trade. All right, so back to the bot here. So the bot is giving us those entries on the 300 tick chart, and if we look at the entries and understand if the market is in a really good choppy phase, and this is happening because this is a tick chart, 300 tick chart. There has to be 300 basically 300 ticks before a candle is put up there. Just like if there was a 1,000 volume chart, you would have to get that volume, 1,000 contracts to go across before a candle would be formed, and then the candle would come in as a Japanese candlestick. So it's going to be a different chart than a time chart. Time charts based off of time. This could slow down. You could have a big move, but because there's not many trades, this will it won't look like a very active trade. I mean, it'll just kind of be crawling along, not much going on. And each candle will be, the candle's only going to be made after a certain amount of trades. So if the trades are not there, it's not going to go as fast as the time. It's going to be distorted, but the setups will still be there. So you actually had a little setup here. You had a divergence there, and a nice run up, and it happened to catch the top. But a lot of times you want to have this running. You want it on your machine. If you upload it to your machine, you can upload it to your NinjaTrader platform and run it. And I would just recommend running on the 5-minute time frame, and the 300 tick using the parameters we have, and understand that it is a tool. It's not a push and go to work type of tool. There's just so much in the markets. The markets have algorithms that take out things. It's better to, this is great to get you, to tell you identified levels, and then even to get you in. But then you analyze the surrounding conditions in the market. Are the market selling off, and you're getting a signal, but it's in a strong sell-off right next to the lows. Dangerous play. Is it giving you a signal right before economic news dropping? You don't want to take it that. Certain times you don't want to be in the market, and this won't know when the Fed messenger is going to come out and say something bad about the market, and the market's going to drop, and it's going to give you bad signals. So you need to be in charge of this. You need to understand when it does give you a signal, if the market's all good and stuff, that signal is probably going to be all good. But the market's on tilt, either direction, then you have to be a little bit more cautious on the direct, not counter trade. Now, if the market's very strong and we're moving up and we're getting these buy signals, absolutely, they're probably almost all of them work out. But the market's going down, you might not get the rotation. And when I say rotation, we're looking at parameters. You get to set right here is your parameters, and you get to set them, apply there. And right now, that's the parameters right there. It's too far away. It's 3, 2, something, 15, I think, or 16, 14 trailing stuff. Anyway, you could zoom in on that. I have it on a computer way away from me. But again, if you have that, I kind of, we talk about this each day. But right now, this has been a set of parameters for the markets in the current state. If we have the dog days of summer or something goes on, and if the market really dries up and it's just not, your range is not that big. I remember trading when the range was like 5 points a day. It was like dead on the S&P. Even the NASDAQ, 10 points. This is crazy. It's crazy. The 300 points here, 300 points there. And the NASDAQ, it's really, I didn't grow up with prices crazy like that. Usually it was 49 points high on the NASDAQ, something like that. Anyway, so these things go really fast, and you have to have your parameters set according to, also the the ranges and stuff. If you're in a trade, let's get rid of this right here. Let's apply that again, and let's apply it, and then we'll close it, and it'll fill it in. It'll fill in what we're looking at. It'll calculate it, hopefully. There it is. All right, so see, like right here, this is a, let's go out. Let's see, take a look here. We had all this the last time. Lots of times I'll take the entry and I'll manage it. I'll move my stops around. I'll move my stop. And in this case, look, you had a low and it came back down, almost took out the lows again. Now during the day, we called this. I said, watch for the market. It's gonna. What do we call here? It was gonna bounce and then come back quickly. That first little divergence was a little fake out. Then we had a running divergence or double bottom. That was a really good divergence. And then from that point on, you probably could have caught all this. And this was I think it was about a 5-minute time frame too. I have to look back because that's a tick chart. The time before that, again, what you're seeing on this, it's grabbing the right area. This little choppy area, you have to kind of prepare yourself for that. Make sure your parameters are not getting whipped around on the bottom here. Think of this as, you're very close to an entry in this zone. If your parameters are really wide, you probably get that, and you're okay. You'll stay in it. If you had big, wide trailing stops, because you're usually right in the zone. Very rarely are we not getting back above the highs, even down a little bit low. What I'm trying to say, if we get an alert like this, here we have this one over here. That was good. Even though there was one right before that. Let's see. The second one came in. Here again, it's pretty close to turning up significantly. Here, we're very close to turning up in a big way. So that's what I mean. When we look at this, we're very close to, even if you got chopped up here, most likely within 10 minutes of, candles. I don't know how that, I don't know how long this is, but this is probably just 3 minutes. It looks maybe 3 minutes of candles in this case, but I would say 5 to 10 minutes, you're probably going to be higher than the alert, even if it goes down a little. Eventually, these are very close to good bottoms. It might chop around a bit, and if you could kind of hang on to that, understand that, read the markets, and say, all right, we're chopping down, but look at this right here. Do you see what I see on this one? I see a low, and I see a lower low, and you could see the low on the 60-10 and the higher low on the 60-10. That's a really good divergence on the 300 tick. If it was on the, maybe on, how'd that work? Normally, this represents a 5-minute time frame. So, but it's measuring the tick chart. It's measuring different things. It's just interesting to see that divergence there. It's very interesting to see that, how well that divergence technique, the momentum, shows up even on charts that you somehow can't, picture it. So every single time we get down here, there's a shift in momentum that we can find out, mathematically see. Our job is to not get chopped up around it and kind of understand markets around it. But the setup is there. Look at these. And what I like to do is let it get me in. I know I'm not going to have, especially, we'll probably end up doing this on Monday with the copy trader. I'll probably have it set to 3 MESs. We'll run this script, and then I'll just run it and manage it. Let it get us in, and I'll follow it up with a trailing stop, and just kind of let everything go that way for the Monday trade. But here we have the situation where the market's selling off really hard, and you didn't get much of a bounce here. We did have, I don't even see oh, I see. It just kind of got under the 20 line right there, but it was actually pointing down. It wasn't really a great setup. Mathematically it was there, but this didn't really get really under the 20. It just happened to tag everything, and the price was probably bounced up a little. But then it failed, rolled over. And then we had one here, and that went up pretty good before taking profits, and then trailing stop coming in, and it moved down. And then you had this other, hard pullback. And if you get a divergence away from the 20-50, 20-period moving average or 50-period moving average, look for the bounce up to the 20 or 50 moving average. And that's all you have to do. If it gives you a quarter, it gives you, 2 ticks, it gives you 4 ticks, it gives you 4 points. It doesn't matter. It's going to give you something, but you have to have the intuition and the patience, intuition and the discipline to take that off. That's the hardest part of trading. That divergence will show you a spot. It might give you some, but it won't give you everything all the time. You quote me on that. That sounds good. It will give you some. It'll give you. What did I say? I already forgot. Shit. Divergences. It'll give you something sometimes, but not all the times. Nice setup there. Nice push back up. So that's the importance of the RockBot and how I programmed it and what it's supposed to look for. But the parameters come into key. It's not about the bot. The bot is calling the bottoms. It's doing a really good job calling the bottoms. It's about how to ride that bottom up without getting stopped out and pullbacks, and how tight your trailing stops are going to be. That stuff is all up to you. I mean, that takes on the site analysis usually for me, and I don't think I could do that managing everything else and doing the trading and the show and stuff. So I let the bot pick these things. If I'm watching it, I'll say, "Oh, bot's hit. Let's move our trail and try to manage it for you." Because sometimes you won't get the biggest moves, but you still get the moves. You're still getting something. If it's not 1 or 2 candles, It doesn't matter as long as we win. Here's a rarity that we sold off really hard. You see a little bounce there, and then roll right over. But look at the 60-10. So there's certain things that we could see. If this is embedded and really embedded, like laying down around 0, damn, that was really, really embedded down here. That's usually a sign of a bear flag. And that rotation to even get, it was a very weak rotation. The market really was sold off here. But these are things we could read. We see that this is embedded. So we see this is embedded and you get a signal wherever it is. You have to go you have to think that it's going to be a bear flag no matter what. You just got to take the setup, like right here, you got a signal, you take the setup and you get out right on the rotation. No harm, no foul. You take what it gives you. Maybe it didn't give you anything. It doesn't matter. You're a machine. You're taking it off on that 80 rotation. Right there, you're taking it off. Most likely, probably 85% of the time, you'll be right. There'll be times it runs, big deal. You'll come back. You'll have a better setup. But this is how you're going to protect yourself, even in the case of going into the wind here. Going against the tide. When you're going against the tide, you got to take it off on the first rotation. Gotta. Sometimes it won't even get there. If it starts turning over, it's not getting there. That's another reason to bail. 2 reasons to bail. Don't make it so complicated. That solves half of our problem. Is if the stochastics on the 60-minute time frame are embedded, you get a signal and you get a fast rotation or you turn over, most likely 80% of the time it's going to be a bear flag. It's going to give you a divergence. And what defeats a divergence? All right, RockStar rule number 14. What defeats a divergence? A flag. So what I mean by that is, great examples are, this is golden stuff right here. And I think this is in the courses too. This lesson about what defeats, and when I say defeats, but divergences work so well. What happens when a divergence fails? What causes that failure? Why did it fail? Well, I want to show you if I could find one that failed. First of all, it's hard to find that one that fails, but up on the top, and we have a certain situation. Well, basically, I was going to show you, but I don't see anything yet. And my luck, it's too perfect. Well, here you have a nice pullback here. You see that nice pullback? This is not really a bull flag in any means, but it has a kind of an interesting story to it. It's kind of coiled. It gets oversold, and you can see this wasn't really selling off. It started to go back, flatlining here and starting to turn back up. Right when we got above the 20 period moving average here, well, that was something to consider, but that's here and there because it didn't grab the bot took the bottom. How do you pick this bottom like this all the time? Look at all these. So this is on the 300 tick chart. Seems to be working great. We're going to keep it on this. You have this. Someone asked me today, can they tell me how to get the alerts from the RockBot? Meaning the RockBot sends. If you go to the RockBot channel. All right, so let's show you that right here fast. And this is again for a lot of the new listeners out there, new members, especially the new members. DayTraderRockStar.com. In case I didn't mention that, and maybe it gets out into the public. I'm sending this out for a lot of the newer members right now. So we're going to switch over to the other chart here. All right. All right, so we're going to bring up the site here, and for those out there, if you let me get this up here. Let me get this up here. All right, so here's Day Trading Radio's official website. You go to DayTraderRockStar.com. You log, if you're a member, you log in. If you're on a trial, you log in. You do whatever you're going to do. To read more about different things of the site. Here's the prop trading thing for the prop trades. This is a great program. It's filled up right now, so it get filled up in just a couple days. So I don't want to commit any more people to this right now because it requires me on one-on-one coaching lessons and stuff, and I am like totally don't want to get myself in over too much. So either way, if anybody's interested, that's the pack. It's very, very reasonable. The members area. Click when you log in. You're going to get your dashboard. Now the dashboard is going to come up. Oh, there it is. I thought I paused it. There you go. I didn't want it. I wanted to pause it before it started mirroring itself. You have your trader dashboard, which has all your tools or a lot of the things that you'll be using here at Day Trading Radio. If you scroll all the way down to the bottom on the right-hand side, you'll see RockBot, you'll see RockBot add-on, you'll see Tradeometer, you'll see School of Stock, HPS, and the Medved Trader. I do have the Medved Trader up there. Jerry got back to me. Jerry Medved got back to me about the chart. He does not offer a discount. It's cheap as it is. I think it's $23 or $25, $29, which is really good. But someone was asking me, so I'll get back to you on that. He did get back to me on that. Let's see here. So you would click. So we're talking about the RockBot channel. So you click on the RockBot, and it would say launch RockBot viewer. Click on that, and then another window will come up, and boom, you have the RockBot is going to show up there in a second. Unless I turned it off. No, I didn't turn it off. It'll be there a second. I might have. Did I turn it off? No, I did not. Because I was doing something. There it is. So that's what you'll see. And you'll see it take the trades and announce where it's going. So people are asking me, can people get this in text message? I said, well, you can, but it is active, you know. And I have to do some programming to get it set up. So that has to go on the list. It's not going to be that hard to do because we did it once before. So I just probably have to I just got to dig into it a bit and get it done. But yeah, we have the opportunity to do that. So you put that on you could even minimize that because it'll talk to you. So well, actually, I have a file that I'm going to give to people. So when they download this, no, they won't have that. Maybe I'll give it to I'm trying to think how it talks. It actually talks if I have my volume on, so I have to keep my volume on so you guys hear it because it's coming out of my computer. Anyway, that's where you see the and you can move it anywhere you want. You know, just move it onto a screen. You should have multiple screens for your trade. You know, for trading. And then you have the Tradeometer. The Tradeometer is another great scalping tool for futures. Tradeometer. Great tool. And I put this out, this maybe 7-8 years ago. And this is based off of Stochastics. As you know, I love my Stochastics. So as you can see here, these are the signals today. And what this does, this was the kind of almost the first versions of the first version. Not version. This is the first version of the quad rotation. So this is based off a series of stochastics on different time frames. It's the 1, 3, 5. ES and S&P cash all put together. So overnight it's running on the ES. During the day it's running on the ES and the S&P. and of course the NQ, and the Qs and the YM and the diamonds. And then the other side we have gold, the Russell, and gold, Russell, and oil. And the Russell is really good too, as you can see. So you go up on the top here. You can't see where you're turning it. Go up on the top here. Let me bring this down. Go up on the top and click that, and that'll bring the other side up. And you can set some alerts on it, and it talks to you too. And you can just minimize that, and that'll just go it'll go down into your taskbar, but it'll also still talk to you if your volume's on. So it'll just say overbought, oversold, and stuff like that. Might call you a name or two. Then we have the RockBot add-ons. So if you have the script, that's where you get the script. If you have a package with the script, that's where you click on that, and you can download. You go to that, and right over here it says RockBot code. Click on that, and it says access denied. Oh, because I'm signed in as one of the members there that I was working on before. DocPat, sorry. That's funny. I'm like, denied. If you have access to it, that's funny. That's so funny. If you have access to it, let me see. Let me clear my cookies. If you ever have problems, also, this is another tip for the dashboard. If something's not showing up, like over here is our trade alerts and stuff. Starting position today in Nike. Was it Nike? Yeah, I started position today in Nike. Anyway, that's where our trades go out. So do your dashboard. Just exit out of your cookies out of that. Make sure our trading view. That's trading view. All right, done. And then it's going to ask you to reload. It's going to now sign me in, and I can't sign in because I'm not signed in. And then now you're back in. Now I'm going to go back to the RockBot channel. Nope, the add-on, the RockBot add-on down here. And then we go to RockBot code, and there's your directory right there. So go to the RockBot directory, click on that. Now there's the template, the RockBot template is there. But I have to think and upload the new one. And then the RockBot latest version is our original Divergences, and this is the super signal. This was the latest one that we just put out last year. I put out. It is the combination. This is the one you really want to run. The other ones you could run has a short divergence, long divergence, standard divergence, has the quad rotation indicator, and has the bull and bear flag. But so that's where you get all that stuff. Upload to your machine, import it with the NinjaTrader as an add-on. Send me your machine code, and you're running it. Simple, very simple. All right. So that's the trade alert box, and there's a lot of other things here, especially up at the top. I've talked about this. Our forum is down right now because we have an update of our software, and it's not compatible with our forum software, so I'm have to transfer that to another software, and I just have to do that. But I'm trying to supply you with all the videos, so if you need any videos, like you want to say, John, I need a video on the triple stochastic setup, I have all those. I'll just send them to you while I transfer these over. That's the playbook. I'll get that to you. I'm going to actually get that in its own little playlist there. The watch list video, every week, put out a stock watch list video. This is from last week. And the new one will go out probably tomorrow or Sunday. It goes out usually Sunday. And I put out an email saying it's out, and this is for our stock traders. It applies the same exact methodology that we use for futures trading, but to stock trading on a daily chart. So every setup that we get into, if you click on that, I'm talking with my face there. Get me off of there. Every setup we look at is, either in a scenario where I'm just looking back at all the stocks. I don't want to play it, but you know, look at a lot of different stocks. That's up on the top there. Also, alert manager, if you want to have your alerts sent to you. This tells you where you want your alerts sent and how to set them up. Trade alerts, anything that you might have missed, you can go trade alerts into a search. That's the, like right now, the late night notice. I'll be doing a video tonight in the RockBot. And then the trades we've been taking. Everything that happened on the site, all the trades, everything gets recorded there. So that's all there for you. And then, of course, there's a lot more. Jumping back over to the RockBot channel. Again, part of this video is talking about the RockBot. The other part is the importance of the 60 period. Now we look at the 60 period here on the RockBot. The 60-10. It's a 60-10. I just shorten it up to the 60 period, the 9-3, the 14-3, the 60-10. Each of the stochastics. The reason I don't have the 44 on this is that I don't really use it on this, and I just conserve space so I can see more of the chart, and I'm not crowding it with too many stochastics. So I only need the 9-3, 14-3, and the 60-10. The 60-10 will define the quad divergence, and if there's strength, and if you get that divergence, you get that super signal, and your 60-10 is starting to move higher, that's a good sign, and you probably want to keep your trade on. If it's embedded, remember what we said. If it's embedded, in this case, let me see if it's embedded anywhere here. Down here, you can see it's embedded, pointing down. You probably want to take your first rotation off, or you're moving that, you're going to look for that downside. If it's going up, quad rotation, and it starts turning up, well, it's going to give us a bigger move. So little things like that are going to help with everything. All right, well, let's push that back now. I wanted to run this RockBot also on the 5-minute time frame. So keep it under 300 tick, just like that. And then also, let's check out the 5-minute time frame here. See the market overall, the time on the time frame, it's really selling off hard. It's just selling off all day. So any type of buy is going to be a little harder against the grain. But as you can see, that right at the end of the day, I actually, we're going to jump over because we're going to look at the one at the end of the day because that was a good divergence. Let's jump back over here. Right at this point, we had a low, and we had a kind of a relative low right here. Remember, we just talked about that price coming down very close, almost matching this. But what I noticed is this right down here. I noticed that the 60-10 was lifting up in a pretty good way. It was actually above the 20. It was above the 20. So if I could see it above the 20, even though it was like 5, 6, doesn't look like a lot, but I really pay attention to that 20 when it comes to the 60-10. And that was a decent, it was something. So, what we see this, when we see a 60-10 and whatever it is, whatever it looks like here, instantaneous, this just like this. If this is higher than the low and there's just something going on here that they're equal or just different, I jump right to the SPY chart. And the SPY will jump out at you, the SPY. If it's a good 5-minute, it'll jump out at you. And it was such a high level divergence there. And that was during the brown. That was right here when it was going down. That actually started to move up when the price went down. That was a good divergence. Now, it didn't go that much, but it did go. I mean, this is on the 5-minute time frame. Considering the how the market was reacting. This also was right on the trend line. It was a 5-minute divergence. I wouldn't be surprised to see this, feed into the energy on Monday, and we could come off of this pretty good to the upside. I'd like to see that. If there's no significant news Monday morning, no Israeli attacks, or no Iran attack in Israel. That's it. That's supposed to be some kind of news this weekend. So who knows what if that happens. I don't think it's going to happen, but you just always have to take it one day at a time. So that 5 minute was a good one. And again, how much was it? Let's take a look. Let's go back here. It was right here at 1450. And if you probably be realistic and you say you got in real late, 51.58, maybe the second candle up, 51.6, it went up to 51.66. That was right about here. From here to here is 6 points. That's a lot, you know. I'd be happy with 2 to 3 points at the end of the day on a 60-10. I definitely felt like that's a good setup right there. But anyway, kind of at the end of the day on a Friday, you know, that's not realistic, really. Kind of wrap it up around 3:15. But you know, I always say it's important to go back, review every trade, see if you missed something, see if. All right. Little lesson here: what defeats a divergence? So we had this divergence here, a flag. That's pretty funny. Oh, we just texted me. Right here, there was a buy side divergence here, a little buy side divergence. It was a low here and a lower low here. All right. So what defeats a divergence? So you would expect to pop up here. But a flag defeats a divergence. So we started saying, all right, this looks like a flag because this is so embedded here. You see how my line was down here? It was like right down on the bottom. It's so embedded on the bottom here. And you can't even see the bottom of it. Shoot. Let me bring this up. I think I messed up a little for you. I'm looking out of my screen and I can't see it. I'm sorry, guys, if I messed that up. Too many hours. Anyway, here's the embedded stochastics. Here's your fast rotation and your price holding underneath the 20 period moving average. That was a textbook bear flag. Textbook. I mean, very weak. I mean, the combination of the 80 and the 20, holding the 20 is very powerful. This was so weak. And we just continue to kind of grind down. Then we had another little divergence here. And then we got a pop. So the flag, even though we had a divergence, this was embedded. This embedded rotation means it's a flag. So flags beat divergences. Same thing over here. Here you have a divergence. You're going to get a little pop into the flag, and then the flag is going to take over. So here's your divergence inside of a flag right here. Low, lower low, low, higher low, fast rotation, embedded, boom, up to the 50, and then right back down. So these are easy to see after you start to you have to just say, is it there? Are the rules? What are the rules? Has to have a rotation, has to be under one of the major moving averages, right under the 20 or on the 50, kind of right on it. The 50 counts just as well as the 20, especially if you are under the 20 for multiple touches. The 50 comes in, and you hear me say this all the time, and not everyone, because I've been saying this for years, and you might just be on this channel for the last 7 days. But what I always say, among many other things, is that rotation. You have to take that rotation. Something else here. You got to scratch your throat again. The big thing is if you have a 20 period moving average and it's holding us, the 50 period always comes in and plays a very good, strong level, unless there's kind of news breaking out. But no, this was another textbook bear flag right here. The rotation, the embedded stochastics, all down there. This was way under 10 at the top, way under some levels. It was really, really weak. It was like 3. George Lane said anything under 5 is like extremely, extremely weak. and that's not oversold. It's actually strong to the downside. And anything that's embedded to the upside doesn't mean it's necessarily overbought. It can mean that there's more strength to come. Make things a little bit more complicated. So we had those nice bear flags, and these are something like that's all we're looking for. Here, not, yeah, we see some divergence. We see some, we want to get too involved. I would stick to your divergence, stick to your flags, make sure your momentum is on your right side, and don't overtrade. And wait for the big setups. And the big setups will come. This is this was a news-driven day today. We had some news. And then we had this Israeli-Iran conflict coming up at the end of the day, which could have led to some downside. I think you get to wait for that market to get into a rhythm, and then these things will show up. They'll pop up like a dandelion. Look at this. This is a good little relative divergence right at the highs overnight. 2 o'clock, 3 o'clock, 3 o'clock highs. Little divergence right there. I would call that divergence. That was kind of the high on the day too. It always happens with a divergence. Highs and lows. Nothing going on. Nothing going on. Boring, boring, boring. This type of setup, whenever you have a small grind pullback like this, very important to watch that. What's great about that is even though you're seeing these little dip lowers, it's confined. And I'm telling you, any type of pullback like this is kind of in a channel, there's a good shot that the divergence is going to define the low. And you actually could see that there. You can see that there was just a touch, just a higher low, very little on that lower low. Very small, but small, I don't care. Small is small, but it still is. Just like back here, still is a divergence right here. At 10:15, that's a great one. And look at a big move, and look at a big move. All right, and there's nowhere else you can see that. This is not a divergence, so I'm not going to call it. This is not a divergence. This is not a divergence. No, I'm not going to call it if it's not there, but if I see it, and we call it, and the market moves in that direction, you better start paying attention. And there's the other things. If that's not, there will be divergences that break down. There will be. But we could prevent half of those. Half of those we could prevent. And I would say this, divergences work. And we'll give it we'll be very conservative with this. 70% of the time. And I want to say that, if the ones that don't work are based on some, maybe news, something like that. We could eliminate maybe eliminate 5% of those are based on news or volatility, but mostly news. And then there's maybe a small 10% that you could define. Let's break it down this way. 10 trades, 7 work out. 1 is probably a news event. So that means 2 really didn't work out. And then 1 is going to be something that you could prevent it because you're going to see it's taking a trigger inside of a bear flag. You could easily correct that or get out of it. You don't have that won't count because you're going to see at least one of those. So now you're down 9 trades out of 10 are good. Maybe the last one just couldn't figure it, it just didn't work. So I would say you can eliminate the bad ones by just paying attention to a couple different rules. And if you have a 70%, if you're just saying, and I'm saying this is high, divergences are going to be higher, but 70% is good. Take one off, one loss off for news or trading at the wrong time. Take one loss off for what did I just say before? Being able to identify the weakness in the market by looking at our other indicators. We'll be able to stop that loss. It wouldn't be a loss. We're going to say, all right, this is embedded. You're getting a divergence here. You got 1 tick. You're looking for 4 ticks. It might not go there. Why not? Because we rotated all the way to the 80, and we're still embedded here. The odds are it's not going to give us more than 1 or 2 ticks. Are you going to sit there and say, I need 4 ticks? No, you just push the button. There'll be better setups. There'll be better setups.